Good evening, traders. It's Samurai Trader here for the recap for today's action on the NQ133. Now, let's remember that the trade setups we're about to go through work on all markets, all time frames. So whether you trade Forex, stocks, or futures, these are the setups you want to learn. If you're new to my channel, please subscribe to be kept up to date. And until we get our new website up, please feel free to email me with any questions you may have at rayftrader@gmail.com, and I'll get back to you as soon as possible. Now, going back to a few things that we've spoken about the last few days, is remember our style is sniping. We're going to sit back and I want you to put yourself in the position of being a sniper, patiently waiting for the setup. And this is the greatest challenge that we all have as traders, is remaining patient. So remember, that is our style. Because what we do know is that trading is about probabilities. Successful trading is a game of probabilities. We know the market's got a memory, and that the patterns that we're seeking, and really I suppose if you ask me, we're really pattern traders. What we're looking for is patterns that repeat themselves every day in the market, and that certainly makes trading a whole lot easier. So let's just go back to the open of the market today. Once again, we still had fairly thin volume, but a few things I'd like to point out. So as we know, we like to wait for the market to settle down. So the market opened up here, the main Globex in our main market. We had a nice rally up here. But I'm usually waiting around, and let me just move this up, traders, if I can. No, it's already recording, it won't move for me. So let me just move this along, because what I want to do is, so look, we normally wait, as you know, around 30 minutes. We want to wait 30 minutes for the market to settle down. Well, here 20 minutes in, and I've got a nice rollover. Now, the reason I really like this particular trade, now here, by the way, you'll see when I was training in a few minutes time, so we didn't go back this far. But what I've got here is this. I've got a lower high. See my paint bar there? It's a little hard to see. See the white candle and the white candle here? So we've gone up, we've tested the pivot, now we've fallen away. Yes, you might have gone in on this trade here as well, which you wouldn't have entered until you had the cyan zero lag appear. And then you had another trade. Let me just grab this here and mark this one up. We had another one right here. All of these were good for a good 15, 10, 15, 20 ticks. Now remember, our target here, an actual fact here, sorry, they're good for 20 odd ticks, I should say. We're after 11 ticks each, so we would have been out around here and around about here, unless you were trailing your stop. Now, as you know, my target is 200 a day net per contract. So I'm already up halfway there if I had been trading my these trades. And you can see here that a very nice, on this particular trade, the reason I would have taken that, by the way, besides the white candle, which doesn't appear to here, is look at my long-term stochastic is still oversold. I've pulled right back and away it goes. And this, by the way, over here, just there, is a T10. And you had another one. So these are all, you would have packed your bags and finished up for the day, quite frankly. Now, let's talk about the challenge that every trader has, and we're heading into it right here. Look at this here. One way that we tell that we're in chop is this. When we see our channel going sideways and our zero lag, which is the magenta, and the cyan line here starts to intertwine, barbed wire as some people call it, or train tracks, that's a danger area. Now, I have to say though, you normally don't pick that until it's too late, until you've had one or two losing trades. So you may have very well have taken this particular trade. The only thing that gives it away that you're heading into a danger zone is what? Look at my long-term stochastic is heading up. So one thing I do have right here, and let's mark it up, is what? Is our T10. So at a T10 trade that you could have entered here. Now, where would have my stop have gone? 2 ticks below here. Now, remembering a T10 virtually is a counter trend trade. It's a change in trend trade, but they're an 85% trade. So you want to be taking them whenever possible. So you may have taken that one, and then all of a sudden you can see your long-term stock going right up, and you've got a T10, which delivered your good 11 ticks for you. Now, even if it had have travelled along here a little further, of course, with your stop 2 ticks below here, you're in all the way, you're safe there. Now, if you're gamer than I, and I don't recommend you do this, you also had a T2 right there. See how my long-term stochastic is nearly overbought? And remember, we want to see with the T2s, which are slingshots, we want to see that wherever possible, oversold or overbought, and this pull back to a little past the 50% mark, and then roll back up, which is what we had right there. Now, let's just move along a little here. And you can see here, by the way, this is all within 10, 15 minutes. It was a slow market for this time of morning, very, very slow. So what else have we got happening here? And let me just put this on, remain in drawing mode here. So we also had a nice T2 right there. Now your entry, why T2? Look, I'm overbought. I've rolled back over here. I've got a T1 signal, see the white paint bar, but I wouldn't have entered till here. Now, for this particular trade, I would have been in that trade till up here to pick up my 11 ticks. So we look at this here, and actually let me just take this off. And once again, I apologize because I wasn't trading this market at the time. So let's take the high of this bar, high 41.50, high 41. Yes, so you would have been out here, so you wouldn't have been in on this particular trade, but it was a T2 as well, a slingshot. Now, what can we see here? We can see our 89 EMA is it starting to begin a very, very clear uptrend now. And you had another one here. Let's mark it up. Now, another very nice winner. Whoops, sorry about that. Just here. So, these are all with trends. So you've had 1, 2, 3. Now, if you're super conservative and don't want to take any trades when you're below the 89, that is mighty fine too. That's a good solid strategy. And what do I mean by that? So traders, see how our 89 is heading down? That is giving us our trend direction. Once we close up above here, and also I'm above on our platinum, above the 0 line, that is telling me we've got a change, at least short term, in the trend direction. So let's come along here. Now, why did I mark this up? Something I want to point out. This is perfect divergence. Now, why is that? Well, notice here that here's our channel heading up, and notice our price action is pulled away from that channel. We're also angling away from the 89. So this is called angulation. And then we had our paint bar plot. Now, this is good for 11 ticks. You also see the divergence on the platinum right here. Now, that is for our divergence traders, not for new traders. Stick with the trend. The trend is your friend. There are tons of these trades. Look at this one. Had one right there. So we've come down, paint bar, you ran on this paint bar here. Now, you wouldn't have been out till here, but you had another entry, you would have been out up here. Look at this. T2, winner. T2, winner. They're firing off left, right, and center. Now, I started a training session at 2:30. Let's have a look at what we marked up live. We can see we had a perfect 89 EMA bounce. As all my traders know and listen to my trading sessions, these are just fantastic trades. You take every one of these. Look at this. Bang, great. Bang, thank you very much. Now, what about here? This is a T10. Notice how our long-term stochastic is still moving up. We've pulled down and we've flung up, and you would have been stopped. That, if I recall, was went down below our little swing low by 4 ticks or more. You would have been stopped on that trade. Lovely winner, stopped, and now a lovely winner again, another 89 EMA bounce. Now remember what the rules are for 89 EMA bounce. Okay, you want to be bouncing directly and touching ideally your 89 EMA. Now over here you had, this is really a T2, and you got stopped on this trade because this ticked up, because I remember when we were marking it up during training, this ticked up 2 ticks. So you would have been stopped on this one. But something else, what is it? You are right on the pivot. So when you're on these pivots, usually It's the second one will punch through. You'll see these bouncing around on the pivots. It's not always always the way, and that's why this is a game of probabilities. And one thing I've learned, traders, is to take every trade that qualifies. Now, there is one big thing, though, on this trade that we don't like. What is it? We are out, look how far out of the channel we are for our entry. See that? We're a long way out. Now, unless you're in a counter trend trade, look, see how far down we are? Ideally, you want to see your entry candles touching or in very close to your channel. Because the channel, and look at this one here, see how far out we are and it's sprung back in? You'll see this, and one thing you'll learn, the further out, the higher your risk is. But then what have I got here? We finally break through. Now you didn't enter this, by the way, until this candle here. So our entry was not till here. Now, I've marked this up again because what have I got? We don't have divergence on our platinum, but one thing we do have is great angulation. Look at this here. See how I've got almost a bubble forming? I'm well away from the channel. Look at this angle between my 89 EMA. Where you get these for our divergence traders, our experienced traders, they're fantastic. Now, your entry was not until this candle. Why is that? I'm waiting for this to turn from magenta to cyan. Now, a lot of you asked me about these little black dashes that I put in, and let me tell you what they are. Let me just come over here, I'll do one here, right there, and there. Now, the blue line is what I call our trigger line. When we see the trigger line cross through our zero lag, and see the zero lag following down here, this is generally, providing we are not in chop, a great indication of change in trend. In coaching, when I train my trainers, this is one of the setups we actually trade once you're experienced. Now, if you're going to follow your trend trades every day of the week, you're going to do what? You're going to do your 89 bounces, your T1s, T2s, and your T25s, which we're going to have a look at in a moment. These are virtually a counter trend trade. And you're going to get on these, on average, at minimum of 2 to 1 risk reward. But you need that because they do fail at times as well. Up here, more bubble. Look at this chop, but what are we at? We're right here, and as I've put a comment here, as I was running our training, I put in there, when the zero lag is caught in the channel, as it is here, equals chop. Be very, very careful. So, and this is where, when you're trading a T98, you've got to be careful. So here, we had a lower high. See the paint bar? Lower high. This makes what we call a T11. These are great trades. So you've got a lower high. You've also got a T98. You can see the blue trigger line crossing through the zero lag, and bang. What have I also got down here? Angulation here for our counter trend traders. Then here we've got a T98 trade set up right here as well. Now, let's have a look. What else? Now, the next trade we marked up here was this. Is this a T2? And the reason I marked that up when we were training is no, it is not, because our zero lag did not agree to right over here, and we're also in chop here. So we've decided, look at our 89 EMA. Traders, this is probably the greatest risk or greatest challenge that we face as traders, is knowing when the market is trending and not. So yes, I'm looking at my 500 volume and my 1000 volume NQ as a general trend direction. However, when you're a newer trader, you can't keep looking at, there's so many things you could be looking at to tell you whether the market is trending or not. It gets confusing. And as I talk about in coaching, one thing I talk about very strongly is what we call confused knowledge. Having too much information, having too many things to analyze, and you know what happens? You miss the trade. And that's one thing about price action when you're trading, like for T25, it's really a pure action trade. It's a lot easier to trade on your T25s. So what I've got here also is target pivot after T1 form. So when you get these bounces off the pivots, now look here, you see you pivot up here and you get these bounces. This is tradable in its own right. And John Carter, in his excellent book, Mastering a Trade, talks about this as well. We've gone up, we've tested the pivot twice now. Then we collapse. Where's the logical target? The next pivot down. My style is in here, is to, once again, is to go for 11 ticks. And there's a reason for it, traders. For me, it's a psychological one. Look, my target's 200 per contract. I want to get in, pick up the 200 per contract and finish for that 8. That's just my strategy personally. But for those that are using ATR stops, etc., you could pick up in a lot of these a lot more. For me, it works well. Here, what have I got here? I've got a lovely T2. See, we've gone up. My long-term stochastic has fallen right down. Now I'm now oversold. I've gone up, picked up, and rolled over, and I had another one. The only thing getting a little nasty about this particular one, and this was good for 11 ticks, by the way, is it's starting to get a fair way out of the channel. Over here, I now have another one. I've got a T1. I'm still reasonably oversold. I started to rise up, which is never perfect, but I am rising. But you can see here my entry was not until, and this has actually moved over. My entry was not till about here. In the VIS candle, I had a late signal. Sorry, this is what I'm saying here, a late signal. What do I mean by that? Well, see my T1 up here? I recommend, as most of you know, I recommend that you wait until the zero lag rolls over and turns cyan. Now, that did not happen until right here. And this is one thing with your back testing. It's you look at it and think, yep, okay, no problems. But remember, we're waiting for a candle to close. So it was a late signal. That's what I put in here. Now, when you have a late signal and you've got so much movement, this is where to go for a stop 2 ticks above this little swing high, the stop's too big. Now, one thing I do say, and this is my belief, if you've got a stop of 20 ticks, you need to be going for a minimum, in my opinion, a risk reward of 20 ticks as well. Very important. Now, I prefer to have a fixed set stop. If it's too big, I'll either still take the trade if it's a high probability trade, but my stop, for an example, might be here and not way up here. This comes down to your experience. And now, the other thing is if your stop's too big, just sit the trade out, because we can see here, the entry was not till here, and then now bouncing up anyway and coming down. So you took some heat, and that can get a little uncomfortable. Of course, our experienced traders got in here, those that weren't waiting for the zero lag, and which is what I promote, wait for the zero lag unless you're really experienced because of the extra heat you'll take. You picked up that one, and of course you had this one here. You didn't get into there. That was also another winner. Can you see here, even on thinly traded days, we kick butt most days. You've got 19 out of 20 days. You're going to have great days like this, even in thin markets. Here, I marked this up because we had a high or low. This is a great indication here of a change in trend direction, a signal I look for. Notice here, lower low, lower low, lower low, lower low, and a higher low. What's that saying to me? Guess what? At least in the short term, there's a very good chance of change in trend direction. Now, we marked this up as a trade to take, and on the simulator, we actually took this, and that went up there and hit the 89. Now, remember, your 89 EMA acts as either support or resistance 9 out of 10 trades. So what should you do? If you enter a trade and you've got this sort of distance, have a smaller target. Or maybe if you're trading 2 contracts, 3 or whatever, divide your contracts so that you do take some off, because you're going to bounce and you see this all the time. And that's exactly what happened. Now, my normal style, as you know, when I hit 10 ticks, I go to +1 or +2. Here you would have been stopped out with +1, +2. Now, here we had another case where this happened, right on this one. Now, that hit +10, pulled back, then continued and ended up as a nice +15, +16 trade. Now, this one also told me the market was still rising. Why? Look at my trigger line, the blue line. My price is above the trigger line, and I've got another paint bar showing me I've got a higher high than this one. So we can see it right there. Now we've got a lovely 89B, 89 bounce. Now what I've got marked just above here is this. 500, 1000, 89 EMAs were right down. They're both trending down. You can't see this because we had a pull back up above. We started to level out, but my higher time frames were both in great trending down. Both trending down beautifully. So these were short trades. So here, if you had have taken this one, once again, remember your stop actually would have come up about there. Because that was getting too big, you may have decided to wait to here. And then once again, that was a big stop as well. So either way, if you had have taken it here, your exit was not till here. Okay. Now, if you had taken this one then as well, you would have been out there. And of course, you had a very, very nice T1 just here, and bang, away you go. Now, here you had a T98. Now, look at these T98s. This one, you had one there, you had one there, you had one there. Now, these are where your trigger line is crossing your zero lag. Now, another comment I put here is spot 25 T25 setups. Pure price action, larger profit targets. One of the challenges we have when we're using indicators is all indicators are lagging. Even the best pure action traders that just read pure candlesticks with your trading, 1 minute, 3 minute, 5 minute, 1 hour, tick charts, range charts, it doesn't really matter. We usually overlay with some sort of moving average just to give them an idea of the general trend direction. I'll trade in the direction of that longer term moving average. Like Al Brooks, I think he uses, I think it's a 21 or a 34 EMA. It really doesn't matter. Everyone's got a different opinion on this. But a T25 is this. The T stands for trade, and the 2 and the 5, a 2 to 5 candle pullback. So let me show you what I mean. Over here, we had 1, 2, 3 candles pullback, then it collapsed. Okay, so that's a 2 to 5. That's a T25. Now back here, look at this one here. We pulled up 1, 2, 3, 4. Really, you could have entered there, but it doesn't really matter because you had a T2. But you had 3 to 5 candle pullback. It's a trend following strategy. And another thing is you can have higher targets. So instead of going for 11 ticks there, I go for a minimum, if it's a T25, I go for a minimum of 15 ticks. Your win-loss ratio is still fantastic, but because you're in usually one candle earlier than our indicators, and really you can't get any more pure than price action trading. Now, what have I spoken about here? I've spoken about higher highs, lower lows. I've spoken about T1s, T2s, T25s, T98s, 89 bounces. Traders, I can already understand why you're confused. And this is why we get back to what? Mastering one setup. We want to keep it simple. These paint bars you can see here, look at them all with the trend. And remember, we're in a fairly choppy day today. Look at it. Winner, 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 winner. Let's just assume here that was part of that trade. Let's just throw a winner. You know the T21s and the T1s and the T2s. That's all you really need. And then look at this here. This is a T10. Here we got a T2, a T2. Now here, by the way, you could have been faked into thinking this was a T2 as well. Now, T2, we remember, is when we're overbought or oversold and we pull back, roll back up. Now, this, in fact, was a red candle. Of course, we're not going to enter in on a red candle. It's a reversal candle. On top of that, look how far out of the channel we are for our entry. We're getting right up high and getting very, very close to our what? Our pivot. Here, we had a beautiful T2. And worst case scenario, you would have entered in, here on this candle being a T1. Now, for those traders that are new, remember our paint bar does not plot until we tick up above our second candle. Okay, there's something else on the coding that happens, but basically you've got to tick up one tick above there before that plots. So you're in on this one. Your entry would have been here. All of those, look at this, 1, 2, 3, 4. That rolled over. Now, what I was about to say, you finished for the day. There's your $200 net. And by the way, that's why I go for 11 ticks on this particular one. 1 tick covers my brokerage, 10's net. Now, this one here was not an entry. Can you tell me why? Of course I can't hear or see you right now. What we've got is a low little double bottom, but here, our zero lag does not roll over till here when we get another paint bar. So in other words, we're waiting for our zero lag to turn cyan as we've had happen right here. Now, my timing, we're getting very, very close to market close now. Let's just see what happened a little bit further along. You had another winner there if you had have got on this one, but we usually wrap up and see this perfect list. T2, T2. See, we're oversold on our Stoke, and our short term comes down and kicks up. Now, one thing I just want to show you while I've got you here and before we wrap up is this is my action right now on the ES aftermarket, the Globex. That is, the main market, of course, is closed, and this is live as we're looking at it. And there's been so far 4 qualified trades. We just had this one qualify. And what have we had? We've had a T2. Can you see how our market's falling down? T2 we rolled over. That's a perfect T2. This one here was a T98. Now, I know from my divergence traders are saying, okay, we know this market, we've had a zero line cross, which is a tradable, I won't go into today, which is another trade we take. But if you wanted to be conservative, you're waiting for this here, which is a T98. Now see, as our trigger line is crossed the zero leg. See that right there? Your entry's there, and that delivered 6-7 ticks. Here you had another T10. Now see how my long-term stochastic is going up. My short-term stochastic is rolled up, kicked up. My entry is at the close of a candle. My zero lag confirms the entry. Where is my target? The target is the pivot. Yes, it might go through and it poke through one tick, but usually you'll get what's happened right now, particularly when the market is very quiet. You get what? You get a pivot bounce. Right? We're very thinly traded. In fact, if we just look, let me just quickly check the volume, what we see is we've traded only 25,000 contracts since 9 a.m. this morning, and it's now 4. So what's that? That's 7 hours, 8 hours. We've only traded 24,000 contracts compared to what normally trades. So in other words, it's very, very thinly traded. And on the NQ, it's only traded 3,300. So when the main market closes, for those living in New York and LA, other countries around the world, it's still a great market. It's just a lot slower. Now, what you do with our super scalpers here, we've got an alarm. So you can be downstairs, upstairs, or whatever. Turn your alarm on and you'll hear them go off. I haven't coded the other ones for that, but there is a bit of sitting around. But of course, that's the day market. That's the after hours market, I should say. Now here, what was this trade here? This was look at my 89 EMA heading down, got a T1 and a pivot bounce. Now your logical point of support is down here. Why is that? Because that's been the low of the aftermarket. So it's good for potentially another 3 ticks, or we may get a kick up. What else have I got? I've got divergence on my platinum, my long-term Stoke. So what may very well happen, and the pre-London market opens in 45 minutes, we may get a kick up here and another T10 setup. Who knows? Who knows? Remember, trading is about probabilities. So traders, I know I've covered a great deal once again. I'm just trying to give you all a really head start. Look, my passion right now, I want to change the trading world forever. There's so much misconception, so much rubbish out there. Traders, become a master, become an epic trader. That's what I want to see you become. Keep those testimonials coming in through too, please. I'm getting some great testimonials on how some of my traders, when I say my traders, some of the people I'm now working with are really kicking butt out there. And they're developing a new level of confidence, not overconfidence. They're really developing confidence and becoming competent at the same time. So traders, I'll probably do another video tomorrow. Thank you very much, and good trading when you get on the screen tonight. Thank you.